All right, so it looks like we are finally getting back to what people would call a balanced market, with the latest month of data, or data, if you will, heavily favoring the bears. I'm that agent Kelly. I talk about Canadian real estate in my local market of Abbotsford and the Fraser Valley. For more information on that and to stay updated with that, subscribe to the channel, like this video, and if you want early access to the newest pre-sale and resale deals, join the Equity Club using the link below, and they will land right in your inbox. So I'm currently holding quite a bit of product right now. I have 5 to 8 active listings on the MLS, I believe, and then a whole bunch of stuff listed exclusively off market. And at one point this year, I was holding over 20 listings, and so far this is what I've been experiencing. Showings are few and far between at the moment. Every showing counts right now. Every offer is considered obviously within reason. And buyers just have way more options these days. They don't need to buy specifically your home. So anyways, let's get into what happened from a statistics standpoint, starting with the Fraser Valley. So let's take a look at inventory. We're currently at 6,109 homes available for purchase in the Fraser Valley Real Estate Board. Now, that's, from what I understand, roughly around the historical average is about 6,000 listings, somewhere in that range. And if we compare it to last year, 4,100. So if you do the mathematical equation, figure out what that is on a percentage basis, when I did it, it was about 48.5% higher than last year. So inventory is up almost 50% year over year in the Fraser Valley. And if you take a look at new listings, sheesh. Look at that, 3,600 new listings. What was it last year? This time last year is 2,200. So I don't even know what that is. It's, again, looks like more than 50%. That's like a 60% increase in new listings. And if we look at the sales to actives listing ratio, which is the holy grail for testing the temperature of the real estate market, 23% this year in comparison to 36% last year. Now this is aggregate. So this is townhomes, apartments, and detached all in one category to form what you see on this chart here. Now, if we break it down by product type, you'll see detached in a buyer's market at, balanced market at a 16% sales ratio. Again, new listings through the sky, inventory up much higher than last year as well. So I'm not going to look at that for every single product type because it's the exact same no matter where you look. But apartments in the Fraser Valley, 26% sales ratio, and townhomes are still, basically on fire. There's just not a lot of townhomes. People need 3 bedrooms really badly right now. There's not a whole lot of 3-bedroom product out there. And for that reason, townhomes are still selling through very, very well at 38% sales ratio. Now, quickly before we move on to the Real Estate Board of Greater Vancouver, if we look at prices, let's just bring this down to 5 years. You'll see that prices did go up, but in a previous video that I did a couple weeks ago, I did mention that the HPI is a lagging indicator. Let's look at sales price. So sales price went down. Sales price typically reacts faster than the HPI, and as you can see with sale prices, they actually went down. The HPI is lagging, and something that I said a couple weeks ago is we would likely start to see this start rolling over and coming back down, and it looks like it is starting to now flatten out and make its trajectory back in a downward fashion for HPI across the Fraser Valley. Now on to the Real Estate Board of Greater Vancouver. So this is interesting. So this is the Real Estate Board of Greater Vancouver, right? We can see prices are sitting at 1.205 million. That is nearly all-time highs. That is very, very close to all-time highs. That is, less than 5% away. That's like 3.5%, 4% away off of peak pricing for Greater Vancouver. Now, again, this is aggregate. This is all property types in all areas combined to form one, right? So inventory, 11,800 in comparison to April's, where is it? 8,600. Again, inventory skyrocketing. New listings, sheesh. 7,000 new listings for April versus 4,300 this time last year. Sales to actives sitting at 24%. Detached, balanced market, apartments, very similar to the Valley, 27%, and townhomes, again, similar to the Valley at 34%. So obviously with inventory basically going up 50% since this time last year, I expect that we are going to be entering a buyer's market in the next couple months here, especially with us kind of entering the back end of spring now. Typically, the market slows down as we go into summer and then fall, so I do expect that we will enter a buyer's market at some point in the next couple months here. With detached homes already being in a balanced market and already down multiple hundreds of thousands of dollars off the peak across the Fraser Valley, I would look at detached homes. Specifically right now, if you don't want to spend a lot of money, you know, I'm now seeing detached homes in Chilliwack, 8,000 square foot lots selling under $800,000. Under $800,000, you can pick up an 8,000 square foot lot with a rentable, livable home on it. You can also get homes on a smaller 6,000 square foot lot that have a suite that will rent for close to $4,000 a month, possibly even over $4,000 a month in the low to mid 800,000s in Chilliwack now. So if you're looking to just pick up some land where most of your expenses will be covered on a month-to-month basis, Chilliwack is an amazing option right now, and most of these homes will cash flow once they eventually do, if they ever drop these interest rates. So I hope you enjoyed that update. If you did, subscribe to the channel for more of it. Like this video, sign up to the Equity Club for deals just like those Chilliwack homes I'm talking about right into your inbox. See you on the next video. I'm that Agent Kelly. I'm making moves to move you. Peace.